major global events as well as our quarter 2 numbers. What strategy are brokerages recommending? Mangalam Maloo has been reading all those brokerage notes. He's going to tell us what they're saying. Mangalam, fill us in.
Well, interesting cues coming in, or interesting strategy notes coming in from both Citi and Credit Suisse this morning. And if you look at them, slightly divergent, but both of them saying the same similar thing. So divergence and similarity coming in together. We'll take a look at Citi's view. They believe that valuations, if you look at the market valuations, they are higher, more than one standard deviation above the long-term mean. But this is only if you look at it in isolation. If you look at the earnings yield gap as compared to the bond yield, now earnings yield is nothing but the reciprocal of price to earnings. If you take the earnings yield and subtract the bond yield from that, gives you a picture that it's still at a 10-year average, or at the same time, simplistically talking, compared to bonds, equity valuations are definitely not all that expensive. Another point that they make is that the cost of equity hasn't fallen as much as bond yields. So there is further room for the cost of equity to fall. And for valuations, cost of equity is the denominator. So if that does fall, we can expect valuations to go higher. And they've put a number to it. They say 100 bips lower cost of equity can actually justify 20% upside. However, the key risks that they talk about as far as our markets are concerned, globally, we have the outcome of the US election, US Fed rate hike, and at the same time we have the inflation trajectory in India that they'll be watching out for as well. Credit Suisse, on the other hand, they say that the broader equity markets have outperformed the global markets currently, and while the one-year forward PE has corrected from about 17.6 to 16.6. September results are likely to be weak, so the pace of EPS cuts might actually accelerate. So because of that, they are cautious and watchful on the broader markets for now. They have made some changes to the portfolio. They've increased weights on some financials like LIC, Housing Finance, HDFC, even ICICI Bank, cut weight on consumer staples, HUL being the big one out there, and they further reduced their weight on IT stocks as well as a few pharma names that should come up for you as well.
Okay, Mangalam, thanks so much for giving us that longer-term picture and how people are reading, experts are reading the market view going ahead. Important at a time when we're seeing big cuts seen in our markets today. Let's get into